Hello, everyone, and welcome to another backstage interview for the September edition of the Metals Investor Forum. I am joined right now by Chad Peters of Ridgeline Minerals. If you haven't heard those names before, it's because Ridgeline is still a pretty darn new entity, having listed less than a month ago. Ridgeline, as a private company, has been around for a few years, as Chad and a few of his teammates there put together a property portfolio in Nevada. So let's start right there. You, Chad, have a lot of experience in Nevada, and when you're putting together your own deal, you had to look across the Nevada landscape and decide where you thought there was going to be opportunity based on what others are finding, what values are being given, and what the majors are interested in.
You bet. No, for sure. And it wasn't easy to pick that project up, right? We probably looked at, I don't know, over in the first 12 months, I looked at probably 60 or 70 different assets, right? And every one of them in their own right in Nevada, I mean, there's so much smoke in Nevada that any one of them can look really great at a high level. So it took a long time to work through kind of what we saw as a real potential and maybe just as smoke. And we were able to spin those deals out of, Swift, Carlin East, and Selena out of EMX. And that was what made the most sense. And, we certainly Swift and Carlin East were our highest potential, what we saw as the biggest blue sky. They were kind of right in my wheelhouse, which was deep exploration in kind of forgotten about districts. That's where I had my success in Nevada with Premier Gold Mines, was kind of reinvigorating the McQuay Cove district with our team. So that's where I saw like the huge upside potential as a company. But we also brought in the Selena package to kind of balance that risk because, at the end of the day, oxide ounces in Nevada still have a far higher premium per ounce in the ground, than any kind of deep refractory target that anyone's drilling out there, unless you're into one of those, kind of monster deposits like Gold Rush, right? So, so we have a good balance of risk. We have oxide at Selena, two really exciting deep plays at Carlin East and Swift, and with our drilling contract, which I can detail a bit more in a bit, but with our strategic contract, it allows us to kind of go after those deeper targets without actually hurting the bank as much as it normally would.
Absolutely. Okay, let's start with the oxide side of things. I love the deep targets, but let's do the oxide side of things. So oxide, like you say, oxide ounces in Nevada are very valuable because it's Nevada, it's oxide, it's easy. But there's also sort of new, I don't know if new is the word, but is the word, but over the last decade, certainly there's been a change in the understanding of where you can find those oxide ounces, and therefore opportunities like Selena rise to the surface and were perhaps bypassed previously. So run through Selena and what you think might be evolving there.
Sure, no, for sure. And Selena is kind of a forgotten about district. It used to be called the Limousine Butte district, and it was owned by Nevada Pacific. Newmont had their hands in it for a while. So did Placer Dome back in the 80s all the way through the early 2000s. And so people saw the potential there. But they're tricky and they're a little bit different than North Carlin, like standard Carlin type deposits have a very, I guess there's maybe a more clear framework on how those systems developed in the Carlin-Trend area. As you head farther south, the same thing goes as you head towards Beatty and stuff. These deposits kind of manifest in a different way. And so when people were looking at it with kind of not blinders, maybe that's being a little rude, but they weren't using blinders, but there was a very specific way that Carlin type deposits were explored in the 80s, 90s, and early 2000s. And so when this target and this project didn't fit that framework, it was dropped. So what we've been able to do at Selena is we've gone in, we've recollected the data. We did the trenching, which I already mentioned. The next step was following up with under shallow cover with our drilling, which is again, in our first phase, we hit 9 meters of 0.6 gold and 7 grams silver, which again shows that the system was narrowing in that case along a structure. But it does show that there's gold grades over consistent widths at surface and in drilling. And now we're testing kind of the on-strike extensions of that system, which is actually showing the stronger anomalies. So we're really excited about what the potential could be at Selena. 1 million ounces. And again, this is forward-looking statement, so I'm not saying there's 1 million ounces there, but let's say hypothetically 1 million ounces of oxide of a half gram is worth significantly more at surface than 3 million ounces of 10 grams that's 2,000 feet down. So every project's different. Obviously, the high grade has a ton of potential, and that's what we're going after at our other two projects. But as far as Nevada's kind of made its name on shallow oxide gold. So.
And you've got some results, that second round of drilling where you're tracking a little bit on strike. Results from that are pretty imminent, right? Like,
I'd hope to have them. I wanted to have them for our MIF yesterday, the Metals Investor Forum, but the assay gods didn't comply. So we're going to have those very soon. Yeah, we're seeing all the right things. With Carlin type systems, I lost my shirt many times trying to guess grades, so I wouldn't even dare to do that now. But, we're seeing the right alteration in the right rocks, and we're excited to get those results up to the market.
Cool. Okay,
Yeah.
so that's the Selena, that's the oxide, that's the lower risk. It's still exploration, so there's still risk, but it's a lower risk thing. And then there's the two deep targets. And of course, deep gold in Nevada is a really significant thing as well. It's difficult to chase because it's deep and that's expensive. But obviously the majors with some of the projects that they're drilling are pulling crazy numbers out of some of these deep targets. So there's real motivation if you can find one of those, to go for it.
Oh, absolutely. And just to try to put things in perspective, like Kennerland's recent intercept was incredible up in their Regno or Frotep project. I don't know exactly what the name is there, but incredible results. But it was 260 GT, I believe, right? So great results. Barrick just announced a 700 GT intercept to the north of Leeville, between the Leeville project and our project, where we're separated by 3 kilometers. And they also are hitting consistently 1,000 GT holes out at 4 Mile right now. So, we're talking these deep intercepts in Nevada are rivaling anything worldwide as far as grade and tons and stuff. So I started my career in Red Lake, which drilling a 2,000 meter hole was no big deal, right? You could drill 2,000 meters, hit 10 meters of 7 grams and be excited because that might be mineable. And yet you go to Nevada, I moved down to Nevada, and you go to drill a 400 meter hole and people thought you were insane. So I think that's where the upside is the fact, we found almost 2 million ounces of 12 grams at anywhere from 600 to 1,000 meter depth at Cove. That was an area that the project we picked up off Newmont, they walked away from it. Well, there's no potential here. I think the same thing, Swift was owned by Placer Dome and Barrick. Carlin East was owned by Newmont for years. It shows all the right things, shows the surface geochemistry, it shows the structure, everything that I'd want to see in an early stage target. We're seeing it at both projects, and it's never had drill holes to test it. Swift has 1 drill hole that tested the lower plate rocks in our general 10 square kilometer target area, and it hit 17 meters of 0.7 grams. So we've already proven at Swift with previous drilling that there is a Carlin type system there, and 1 drill hole is far from enough to say definitively whether a 20 square kilometer area is prospective or not, right? So we're starting that drill program this weekend at Swift, and we're really excited. I think that we'll do 2,000 meters there, take a step back and see what we get out of it, but we have pretty high expectations.
So 2,000 meters at Swift, right around the corner here, and I'm sure that's testing. That's probably, obviously you're looking for gold, but you also need to understand better what exactly is going on at depth. So I'm sure there's a range of achievements that you're looking for in that program. Yeah,
there's both technical and corporate. You can look at it from 2 perspectives. And I always hated when you'd see a company go and say, "This is a big technical success." And now that I'm running my own company, I'm like, "Guys, this is a technical success. We should be very excited," kind of thing. But no, there's two things we're trying to do. Is we've built a geologic model based on our mapping and our field work over the last 2 years. The first step is these are the first holes in 20 years on this project. So the first step is confirm that geologic model, show that what we think is going on is somewhat in the range of what we're actually seeing. All you hope for is, you can be 80-20. That would be wonderful. The next step is okay, we know there's altered rock already in the right host rocks from previous drilling. Can we now follow up and improve on those results? So if we confirm the model and get any type of consistent alteration showing that we're in the right area, that would be a huge success because it's an 18 square kilometer structural corridor that's never been tested. You look at Great Bear's LP zone, right? Not going to compare those two because that's probably the next Hemlo. But point is that was a forgotten about district, forgotten about area, and a new interpretation of a structural zone where they've now made multiple discoveries. And so over 18 square kilometers, I would hope that if we have some success, there's potential for multiple zones to be scattered along that zone, not just one. So.
And then interestingly, we want to wrap this up at Carlin East is a fairly similar description as well, obviously different, but a similar setup to what you're talking about.
Exactly. Yeah. No, it's the Leeville deposit, for example, is 3 kilometers to the south of us, 3.5 kilometers. It is bounded on both sides by 2 major fault zones. Those fault zones continue. We've mapped them all the way from Leeville across our property. We've confirmed them with drilling, and we proved that the lower plate host rocks were about 800 meters down, where Newmont had previously thought they were closer to 1,500 to 2,000 meters down, which in the 1990s and 2000s, that wasn't going to cut it, right? But with what Barrick's doing at 4 Mile, Leeville's now drilling the 1,000-meter down dip extensions of that deposit, right? So I think that we kind of just timed it. We're lucky enough to time it well. We're kind of in that, we're in that world in Nevada now where people don't shy away from drilling deep holes, and with our drilling contract, we're able to go after it pretty aggressively.
Okay, quickly, just to wrap up, talk about that drilling contract, because you just talked about drilling through projects, some of them with deep holes, drilling, but you've come up with an agreement with one of your founding members that means that you can put more money in the ground. You can get more out of every dollar you put in the ground.
Exactly, yeah. So I co-founded the company with Steve Neilsen, a good buddy of mine who owns a drilling company. He guaranteed us 50,000 feet of drilling for 3 years, or at a significant discount to a drilling rate. So what that means is, we put more feet in the ground with every dollar than our peers. And, for example, at Selena, that would be a project that would probably cost $35 to $40 a foot, all in, mud, fuel, you name it, everything, right? The pencils to drill those holes, everything around it. We did that same program for $20 a foot, all in. Our actual direct drill cost was only $10.33. So we're drilling at essentially a 50% discount to our peers. And so that 6,000 meters is a heck of a lot cheaper than most of our peers. So
which is great. Yeah, it takes drilling to make discoveries. It takes money to drill, but if it takes less money, that's better.
Well, if you're not drilling, you're not exploring, right? And that's, I think, at the core of it. You have to be putting drill holes down. You can soil sample all day long. It's all part of it, building that story. But if at the end of the day, you don't put a drill hole on it, it doesn't matter. Perfect.
Well, thanks for the introduction. I think that was a great rundown of Ridgeline's portfolio. And there's a lot of news flow to come from you guys over the next, call it year and ongoing. But lots of excitement.
Well, the next 3 months will be huge for us for sure. We have, 3 projects being drilled, catalysts every month, a potential drill catalyst every month at each one. So if anyone wants to look at our website, ridgelineminerals.com, check out our verify model, or check out our LinkedIn or Twitter. We're always updating and trying to engage with the shareholders. So
perfect. Well, thanks, Chad, very much for taking the time, and keep us up to date.
Thanks, Gwen. Appreciate it.